Hello everyone, welcome to this episode of KPMG's Doing the Deal podcast, where we share insights, challenges, and lessons on doing deals across the West Africa sub-region. My name is Asare. I'm a partner in the Deal Advisory Unit, and I'll be your host for this episode. Joining me on this episode is Shirley Somuah, a partner at CardinalStone Capital Advisers. Shirley, you're welcome.
Thank you for having me, Evans.
Good. Maybe let me start by allowing you to introduce yourself briefly and your experiences at CardinalStone Capital Advisers.
Sure. Hello, everyone. My name is Shirley Somuah, and I'm a partner with CCA, CardinalStone Capital Advisers. CCA is a growth-focused private equity firm with the West Africa region as our primary focus. Along with two partners, I run the private equity business. And so some days it's team building, some days it's sourcing deals, some days executing transactions, and everyday fundraising. I've been with the team over 10 years now, from our principal investment days through to private equity, and currently lead our Ghana business, although I do deals across the region.
Thank you very much. Thank you. So, CardinalStone Capital Advisers, what is a bit of history of this, PE firm? What is the structure of the fund? Which geographical areas do you focus on, and do you have any specific sectors that you focus on?
Great. CCA is a West Africa-focused private equity firm. From a historical perspective, we actually spun out of CardinalStone Group, which is one of Nigeria's leading multi-asset financial services groups. We used to be the principal investment arm of the group and then spun out to run an independent private equity business. With that spin out, we've built a team now that raised our first $64 million fund and is currently raising a second $120 million fund focused on the region. We do anything from strategic minority to majority investments, partnering with entrepreneurs, really with the objective of seeing how can we have transformational impact at scale and how can we build businesses that go on to be regional sector leaders. We don't have a particular sector focus. We are generalist investors and really look for good opportunities where we can build enduring businesses alongside entrepreneurs.
Great. So how long have you been doing deals across the West Africa sub-region?
Gosh, CardinalStone Group is 17 years old, I believe now. The private equity business as an independent business is 8 years old now, and I've been doing deals from the principal investments days through to private equity, so over 10 years now.
Great. I think one of the recent deals that we know you've done is an investment in a renewable energy company in Nigeria, Arnergy. Yeah. What was the key attraction to that investment? What attracted you to, and how did you go around that investment? And we understand that you led Series B funding for that, almost about 18 million. How did you go about it, and how did you assess the company's readiness for the Series B funding?
Sure. So Arnergy is one of Nigeria's leading off-grid solar businesses. And for us, I think if I start from the attractiveness, from a thesis perspective, we're always focused on sectors where there's clear unmet fundamental demand. If you think about Nigeria has extremely high energy poverty. Close to half the population doesn't have access to grid power. Even where there's power, it's terribly unreliable, and so there's strong need there. That being said, there's been an important focus from the government and strong investment, but if you think of the historic underinvestment, any solution to the power problem was going to have to include a distributed solution, which is where Arnergy comes in. So that's the first piece of the attractiveness. Second, in thinking about the market, is Nigeria is well positioned for solar, and actually at the time of our investment was one of the fastest growing solar markets in the world. All that coming together at a point where solar technology has improved, so the cost to deliver solar in terms of both the cost of panels and of storage has been dropping. So we found that quite attractive. As a growth investor, we think about, is this business really primed for growth? For us, that means if it's an earlier stage business, is there clear product market fit? Is there a team that we believe we can back to do this? Does the team have execution capability? And we found all of that in Arnergy and thought it was a good one to go into. Go ahead.
Talking about, renewable energy in this era of sustainability, was that also one of the key driving factors, investing in a sustainable, project or business? Is that one of the consideration?
That's really important to us, and it was.
Right.
So climate in general is one of our big focus areas.
Okay.
If we think about the West Africa region, it's one of the most vulnerable regions for climate change, and any investment that touches SDG 13 is important to us. So that was a big consideration in thinking this is something we should do.
Sure, thanks. What were some of the challenges going into Arnergy, and how did you address some of the challenges that you faced?
Arnergy was a tough investment in many ways. I think the first is that it was a uniquely challenging position from a macroeconomic perspective. We invest in this region and we're used to the cycles, but to give an anecdote, when we signed the first term sheet on Arnergy, the Naira was in the range of 500 Naira to the dollar. We renegotiated once at 800 Naira to the dollar. When we were closing the transaction, it was 1,400 to the dollar. You can imagine it made for a very tough discussion, tough negotiations with investors, tough rethinking on our end to be sure we could still underwrite the transaction, and all this with a founder caught in the middle who's just thinking, can I have money to continue growing my business? That was the first big challenge. The second big challenge is it was just a complex transaction. We are Mauritius investors focused on the region. We had 5 co-investors. So as you said, we led the transaction. We had co-investors, which included European DFIs, US-based investors, Nigerian investors, and so had to think of all those different jurisdictions while looking also at a Nigerian operating company, Mauritius holdco, and then certain structural changes for regulatory requirements. So it's a complex transaction, but good team, good investors on both sides, and then we had some good advisors alongside us.
Great. I think the challenge of the macros, as you put it, almost 3 times. Starting off with 500 Naira to a dollar and closing almost 1,400 Naira to a dollar. That's quite a significant currency risk. We've always had these issues across the sub-region in terms of currency risk and currency risk, exposures. Talking about the complex nature, do you think that the different, elements in the deal, where the different shareholders or investors were coming from all contributed to the complexity of the transaction, and of course the macro indicators as well?
Absolutely. They did all contribute in different ways.
Okay.
I think what helped is one of our core tenets of investing is thinking, how do we find businesses that are resilient? And so in the case of Arnergy, we were confident that even though the underlying business earns local currency and we're a dollar fund, it's a high growth business in a strong market with strong prospects. And so we're confident that it would be able to outgrow the impact of this FX evaluation coming in. And I think there are different sets of investors, but everyone with a focus on how do we build and scale a transformational business. And so people were patient and open-minded to say what needs to be done from a structure perspective to make this work.
Sure. Thank you so much. I think Arnergy, we hope, will become a very successful story that one day we can also discuss here. But one other investment that we know you have a stake in is Quality Foods Africa. We understand you are almost at the point of exiting. Maybe I'll give you the opportunity to maybe share a bit on Quality Foods and what the exit strategy is. When do you intend to, and then what is the difficulty with exiting investment in the sub-region?
Okay. On Quality Foods Africa, I wouldn't say we want to exit because that means we want to leave or we're running away.
Okay.
But just as a PE investor, naturally there's a time in the cycle where we have to consider options for who's the next partner. Okay. QFA we're quite excited about. It's one of the leading multi-brand fast food businesses in Nigeria. The 2 international brands, Krispy Kreme and Dodo Pizza, are very strong with good market recognition. And then the team has built 2 in-house brands as well, Scooped and Burger Nation, which we're proud of. In thinking about exit, for me, the exit starts from the point of entry. We as investors at CCA always think, what are the routes to exit, what's going to be the right time, and who are potential people we can exit to. In the case of QFA, we backed phenomenal founders in Alex and Edmund, and alongside Freddie, who's the current GM, and then AAQSR, their first institution, we've built a business which now has 53 locations across both Lagos and Abuja and continues to grow. As we think about exit, the question for us is, does that business continue to have growth that is exciting to the next person coming in? QFA has had really strong same-store sales growth, and then as we continue to add locations, continues to grow. So from that perspective, I think the consideration is always timing. In markets like ours, there's cyclicality. You're thinking, where are you in the macro cycle? Where are you in election cycle? What is investor appetite? And all of that factors in. But we think that QFA is quite well positioned and we're excited. And generally from a macro perspective, I think we're coming out of a tough time and there's more appetite for Nigeria in particular and generally West Africa consumer. So we're excited about the exit opportunity.
Great. So it's more of the timing which you believe that it is the key consideration in exiting. Okay, thank you so much. Maybe generally across the West Africa sub-region, apart from the macros, which we know is been battering most countries, including Ghana, what are some of the other challenges that you face doing transaction across the sub-region and Africa in general?
So it's a mix of things. For sure, macro is the absolute number one, which we've talked about already in these various transactions. I think we're also in a phase where the market is not as mature in some of our countries from a private equity perspective and private capital. And so there's sometimes a lot of patience with entrepreneurs in terms of really understanding what's their vision and getting them comfortable with the fact that private equity can help them achieve their vision. And it's not people coming to take over their company or do something negative, as there's sometimes a negative perception. And then maybe the last piece of it is if I think capital markets overall, we don't have very deep capital markets in all of the countries in which we operate. And so from my perspective as an investor, thinking about exit, I always have to think it's highly unlikely I'll exit through the capital markets. And so what are the other routes? That's one challenge. But the other is we're typically equity first investors, but that equity is best positioned alongside other instruments in the capital structure. It's not that easy for entrepreneurs to access debt. Ideally, they want local currency debt that's well priced, challenging in all of our markets. So just thinking, what really is the mix of things that need to come together for growth? So that's the second thing I would talk about. Third is just generally as we think of the economies, it's one where my partners and I like to joke that you have to provide your own ecosystem. You can't focus just on your core business without understanding the supply chain elements, the linkages that are required to make that be successful. And so you often have to be sure your thesis can transcend beyond just what your core locus is.
Great insight in terms of the challenges doing deals, across the sub-region, macros, the maturity of the different markets, exit routes, and all that, coming together to really. So how do you see the deal-making landscape turn out the next few years across the sub-region?
At CCA, we're excited about the deal-making landscape.
Okay.
I think from a few perspectives. We do believe that these are our markets. Whether they're up or whether they're down, people continue to live and thrive here, and there's a role of private capital to play.
Sure.
From that perspective, we think there are always opportunities. Now, I'm uniquely excited because we've come out of very tough periods in both Nigeria and Ghana. And out of the tough period, at least there's the upswing towards the peak. We think that there's a level of macroeconomic stability. There are governments that are quite private sector focused and ensuring that there's growth. And overall, if you think of the role that private equity has played in different markets in really developing and enduring businesses, we think we're just at the beginning of that, and there's a lot of opportunity to continue. So overall, we continue to be excited about the opportunity both in Nigeria and Ghana. I think the most exciting thing for me currently is the level of participation of domestic pensions, both in Nigeria and Ghana. And we're excited to continue to partner to build businesses that impact the lives of our people on a day-to-day basis.
Thank you very much, Shirley, for the opportunity to engage in this conversation.
Thank you for having me, Evans.
You're most welcome. Thank you so much for being part of this episode of Doing the Deals podcast. We're excited to have you always, and we hope to engage you in further conversations. Thank you very much.